the broker reports and what brokers, analysts are recommending. And I said, I was very swayed by this research, and I thought, oh my God, like it's a gold mine.
Right.
And it took me about a year to figure out that they didn't have a very good track record and it was not a good strategy. And I lost money. I lost probably half my money in that year. And I had no money to begin with. And I started with a few $1,000s. So anyway, it was the end of 96. I wrote down kind of my rules, and I wrote down really, I kind of did a deep dive into my own personality, because I think you have to trade in line with your personality. Everyone is like, oh, I want to be like Bill O'Neill. Well, Bill was Bill, and not everyone can be like him. He was, um, he was like ice cold veins. I mean, he could take the pressure. He could handle concentration.
Yeah.
He was very quick on the dime. He was very, very humble, very quick to realize when he was uncomfortable or wrong and reverse the position. I mean, not everyone has those skills. Some people just are a little more risk averse. I mean, I'm not, but actually I do trade with a lot of concentration and risk, but it's not for everyone. And it doesn't always work. And certainly had my ups and downs in the market. But to answer your question, I started having success in 97, following more of a swing trading approach. And I just determined to myself I was a singles hitter. That's where my sweet spot was. And my goal was to hit singles and compound my money as quickly as I could. And that's what I did. And in 97 was my first big year. Now, mind you, we were in a bull market, so
Right.
I can't take all the credit, but it was a very good trading environment, and my account was up about 700% in 97, and followed by about another 100% in the first half of 98. And then we had our first bear market that I experienced, which was the long-term capital blow up and
Yep.
that little 3-month 30+% pullback in the NASDAQ. And I lost about 2/3 of my money, not knowing how to handle a bear market. I just kept trading and kept losing.
And are there any specific, techniques or ways that you're trying to be a little bit more aware of when you're getting towards that over exuberance, that overconfidence where you might start to realize, start to let things slip a little bit? Is there anything you're kind of working on, more journaling, kind of mapping your emotions a little bit like that? So you're kind of more aware of it earlier so you can take those steps that you need to
Yeah,
protect
that's
yourself.
well, I've tried so many different things, Richard. I actually programmed little pop-ups in my Excel sheet. So like if I fall a certain percentage off my high, I'll get an alert like raise cash or get off margin, or
Right.
I have these messages to myself. But the truth is I usually ignore them or don't act on them the way I should. Um, so I mean, I am absolutely committed to taking more money out of the market in my next run, and just leaving it out and just having it in a bank account. And I've always been oriented toward maximizing my net worth. And so every penny I have, I'm trading, because that's where I can make the most money. And having a lot of money in a bank account just doesn't make sense to me, because it's like putting it under the mattress.
Right.
But in those tough times, it actually is important to be able to, not be stressed out. I mean, if you're stressed out about making your daily bread in the market, you're probably not going to do too well. I mean, you have to be loose and be able to take risk. And if everything is riding on a trade, I think that's too much risk. So I think as you are having success, pulling money out of the market is not all of it, but just, pulling out little bits here and there can, I think, add to your success as a trader, because you won't be so worried about having to perform perfectly well, because uh, the market trading is, something where we're always dealing with uncertainty.
Yeah.
There's no certainty in the market. we don't know which trade will be a winner or loser. All we can have confidence in is that if we have an edge, and we're in the right environment, then you'll be a winner over a longer period of time.
Right.
So I think focusing on the process of trading is really more important than focusing on any individual result of a trade. So just, kind of stick to the process. Well, so Richard, to be honest with you, I've learned the lessons, but I keep relearning the same lessons.
Yeah.
And so, and I think that might be a message to the viewers of this podcast, is that I've had quite a roller coaster career, and even this past year has been literally a disaster in my account, which I didn't think I would have to revisit these same lessons that I seem to have to learn every so often. So I think it's okay that, repetition might be what's required to kind of evolve and grow. This, I guess, a message to the viewers is, if you've experienced a market downturn and maybe made some mistakes, and maybe it's not your first time, it's okay. The market will always be there, and we can strive to be better. So the main lesson, Richard, is to trade in line with the market.
Mhm.
And it's really the M and can slim. It's, don't think you're smart enough to trade to make money going against a trend. So if you're a long trader, which I am, I rarely short, you're not going to make money on the long side in a bear market. It's just your hit ratio is going to be terrible. For every one that you hit, that you're up on, you're probably going to have 3 or 4 that you're down on, and you're going to net lose money.
Yeah.
And as you lose money, you're going to lose confidence. And confidence is key to trading. You cannot trade well without being confident. So I think really the main lesson from the downtrends in the bear markets is to have the kind of the foresight and the patience to just sit out, and or maybe try shorting if you have that ability. I mean, for me, I think you're imprinted with how you first made money. So I made money in a bull market. I'm always thinking of buying. It doesn't even occur to me to short until it's kind of like late in the game. And people who made their money shorting at the beginning are always looking for shorts. That it's just, I think it's a natural tendency. Livermore said, it's not the bull side or the bear side, it's the right side. So I think the truly great traders have that flexibility to go long and short and have no bias. But honestly, I'm not one of them. I mean, I've made almost all my money on the long side. And so did Bill, by the way. So, and given that markets over the long term do have a tendency to move up more than down, I think it's okay to be that way. But it's really key to sidestep those periods of time when the window simply isn't open for making money. So I think that's the main thing, is trade in line with the trend. And when you are trading well, and you're maybe just in a couple of great stocks that are doing well, there is that tendency to take your eye off the market because you're just focusing on your stocks. And so I think it's important to kind of have a routine where you actually are looking at the indices, every day, and really analyzing them and trying to determine, are we extended? Is there distribution in the market? Are we trading above, the moving averages and all that stuff? So Mike Webster has once said to me, or said, maybe it was in an interview, but we worked closely together for years. Nothing good ever happens below the 21-day moving average. And it's so true. If you just look at the 21-day moving average and put that on a chart of the NASDAQ, when you're trading below it, you're not going to make money. It's just, so trade in line with the trend is really the most important thing. And then, by doing so, the odds are in your favor.